Good afternoon, all of you, right? And thank you so much for the people who are joined online as well as offline, right? You know, today is a Sunday holiday, and we all know how busy for the banking people on a weekdays. During a one day, we take some time to learn. That itself shows the courage, the what can I say, hungry for learning, right? And to know more. And thank you so much. And uh, you know I really appreciate the kind of energy what you all have to take some time to come here and join online, and to attend this seminar and go on, right? uh, Trust me, the next 1 hour, we will take you through the complete understanding of balance sheet, how to identify the good proposal, and how to minimize the NPA. I cannot say how to avoid NPA, because today's contest, taking a proposal itself is difficult. Identifying good proposal is the next level of difficulties what we have. And then finding a good party, giving them a loan, collecting it back, and making a good NII for a bank, all these things are challenging today, right? So looking at the current context of, the market condition, economic conditions, right? So these 1 hour sessions, trust me, I will take you through the complete understanding of balance sheet, how to identify the good proposal at the current economic situations, right? How to manage, when the proposal comes. Not like earlier period, the proposal come and we just do the analysis of balance sheet, income statement, and make some few ratios and giving the proposal. That is not sufficient today, because the number of defaulters are increasing. I cannot say all them are willful defaulters or a planned defaulters, but the today's market condition also is changing it. The investors are more cleverer than the bankers. When I say borrowers, it's more cleverer than the bankers. They know the loopholes in the banking system. So today's contest, we wanted to know how their attitude, how they are making money, how the economic conditions making them to fail, all these things which we need to see, right? So with this optimistic note, we will start our presentations, and next 1 hour, we will take you through the complete understanding of balance sheet, how to identify the good proposal, how to minimize the NPA. This is the three major objectives which we have. And please reserve your questions. Probably I will answer your questions end of these sessions. And these sessions is not specific to the working capital. It's not specific to term loan or project funding or LC or guarantee. I'm just taking you through a complete overview of how the credit proposal we should evaluate at this current juncture, because you all know you have evaluated multiple proposals, but at this current juncture, what are all the things which we need to look at and key parameters we need to look at. I will also sail through some of the points in the balance sheet, right? So let us understand that the credit proposals, and before that, I will start with the few thought process for us. The great Chinese thinker and philosopher, and he says, I hear and I forgot. I hear and I forgot. Whatever I am hearing, I forgot, because that is a human tendency. And he also says, I see and I remember. That is the reason in a school children's, they will, the teacher draw diagram. Elephant means the teacher will not say elephant. Draw a diagram and show how the elephant looks like. I see, I remember. But end of the day, what I do and I understand, that is very important for us, especially credit. It's like swimming. You should get into the swimming pool to learn the swimming. So what I am suggesting is, probably you have an opportunity, you may not have an opportunity, but in your branch, whatever the credit proposal comes in, get into that, understand that. Each credit proposal, is unique in nature. We cannot just generalize all the customers has got the same profile, all the balance sheets are same. So get into that and understand what is exactly it is. Right? So we always think loan proposal means or loan appraisal does not mean just analyzing profit and loss, not just like analyzing the income statement, not just analyzing the balance sheet or just drawn the ratio analysis. It is beyond. It is something beyond. Do you think Nirav Modi balance sheet is bad? Do you think Vijay Mallya balance sheet is bad at the time of giving credit? Definitely not. Do you think the bankers has not done that complete analysis of their financials for last 5 years, not done the trend analysis? Definitely not. That is not the case. But there are points which is beyond. There are points which is outside the balance sheet. There are points. There are certain things which is outside the income statement, which we need to evaluate, which we need to rethink, revisit, relook at. Right? Let us understand what is a loan appraisal, right? People say it is a structured analytical tool to take the credit decisions. The people say it is a structured format. When I say structured format, it is not just, it's our own personalized decisions. It is a structured decisions which we need to take, right? So we need to analyze not only the P&L, not only the balance sheet, there are other things also we should look at. One is promoters. Who is a promoter, right? And what is his intention? Whether he has got a good attitude to make the payment, repayment, right? First we need to analyze and understand the promoter's capability. His financial capability comes in a second. Whether he has got experience in the businesses, he can able to forecast what is going to happen on the next 2 years. Whether he can able to forecast next 5 years what is his business is going to be. Because I never thought, I never understood, I never, expect the Ziggy and Sumato kind of a delivery partner comes and deliver my lunch, right? In 20 years before, when Y2K problem or the e-commerce build up, I never thought we will buy so many things in Amazon, we will buy so many things in Flipkart, we will buy lot of things in online, right? Today, everything is online, right? Today, almost 30-40 people are joined in online program and our seminar to attend. There is a comfort, there is a convenience, but that takes away the physical form of businesses, right? Whether the promoter has got a financial capability, has got a ability to forecast what is going to happen for next 5 years for his businesses. That is what is important. Then next one is viability of the businesses. Whether the business can sustain for long term. Macro environmental, micro environmental, how the global, the factors which affects the businesses. That is the second point which we need to look at. Third only comes in the business financials. Earlier days, 20 years before, when we ask, the loan proposal come, the first question we ask the promoter is, please bring your P&L and balance sheet, last 3 years. Today, conditions, the financials comes in the third point, not in the first point. Financials is the third point. The first one is promoter's intention. Whether he is taking a loan for defaulting, it's a planned defaulter. Some of the, I'm not saying everyone, there are promoters, there are borrowers at the time of taking the loan itself, thinking that and finding the ways and means to default, right? So we need to look at, and what are all the other macro, micro, environmental factors which are affecting the loan proposals, right? After that, what are all the various risks attached to this proposal? The risk management is important. So when you are taking a flight, first you check whether you have a parachute or not. Then only you can think of taking the flight. The risk management is very important for every credit proposal. What is the plan B? How are we going to manage this? Let us look at how do we evaluate the promoters, right? When I say you evaluate the promoter, what are all the factors, what are all the parameters we need to see? Find out track record of promoters. Today, information age, you have all the information on the website. You have all the information on the website. track record of promoters, net worth availability of funds, management, who is a key person managing the businesses, whether the key person is got a track record of managing such a businesses, experience of management, ownership pattern. All these things are important, right? So when you are evaluating the promoter, whether the promoter is just an investor or he involves in the businesses. If he involves in the businesses, whether he has got a experience of managing such a businesses. Somebody wanted to know the classic case of again coming back to the Vijay Mallya. Why he has failed? He was very good at liquor businesses. He was very good at liquor businesses. When he started airlines, you don't have experience of managing airlines businesses. Managing airlines businesses is not easy. The big players are failed in the market. He has pumped all the money to the airline businesses. He is trapped with the cash flow. So he has failed. So the promoter's track record, which is very important. Then individual net worth and availability of funds. That is also very important for him. Right? Experience of management. That is another point which we need to look at. Then ownership. Right? When I talk about viability of businesses, what is it? First one is SWOT analysis. What is SWOT? Strength, weakness, opportunity and threat. Right? So the opportunity and threats are external. Right? Opportunities and threats are external. It is not internal. You cannot have any control over that. Right? And strength and weakness are internal. You can minimize your weaknesses at a certain extent. But, beyond that, you cannot do much about that. Right? Let us look at viability of the businesses in the SWOT analysis. Right? What is viability? Let us understand the strength, weakness, opportunities and threat. Right? But this is the way the people can do that. But let us understand whether we do SWOT analysis or we do TOS. Right? Earlier days, we used to do lot of things which in terms of SWOT. Please move from SWOT to TOS. The SWOT analysis is a very old concept. Don't do SWOT analysis. Do TOS. What is TOS? First to find out what is the threat for these particular businesses. Where the threat comes. When some 2011, I was thinking that 3 industries which is a recession proof. One is education, second one is hospitals, third one is food industry. I was thinking that 3 industries are, recession proof. It never fails in any time, right? But I never expected the corona comes. During the corona, what has happened? Most of the education industry closed down. They were not able to survive. And bigger hotel are struggling. Only the few hotels are surviving. The small hospital where they don't have a beds, they are not treating for corona. They are all closed down. Right? So, moving from SWOT to TOS, that is very important. Threat, where it comes from. This is all external. It comes from anywhere. It comes from anywhere. We cannot predict. Right? Next one is opportunity. How the opportunity evolved. Right? I will give a classic example. One of my friend, right, good friend, aged around 50, 60, and she wanted to start a small businesses. I said, you start a cloud kitchen. Today she is making around 1.5 lakhs in a month, right? Because of the Swiggy and Zomato. One side Swiggy and Zomato is a threat to some businesses. Other side Swiggy and Zomato is an opportunity for someone to do a businesses, right? Somebody's threat become an opportunity for somebody, right? We need to evaluate TOS, not a SWOT. Right? Then finally weakness, strength we know, we can maximize our strength and do the businesses. Right? Right. Let us understand how the threats are coming. Growing competitive pressures. Right? DMart is coming. Small corona shop is struggling. Growing bargaining power of customers. Before, today morning my sister wanted to buy a monitor. I told her to check first in Amazon. What is the price? And go and check in the shop whether she can get it in the same price or cheaper than Amazon. Bargaining power of customers, suppliers is growing. Changing buyers' needs. People don't buy now, desktop. They will buy only laptop. People don't buy, today's contest, they don't buy even TV. Even after some years, the people will not buy printers, right? So how the adverse government policies comes into the picture, and vulnerability of recession and business cycle, these are all the points which will also help you to understand whether the credit proposals are good or bad, right? Let us look at industrial scenario. Faster market growth, right? Enter new market customer, expand product line, how forward and backward integration plays a vital role, right? Let us understand the weakness. Lack of management and debt, classic example. Various business fails because of that, right? New customer with unproven track record, right? And then short on financial resources. Technology obsolescence. Today the technology is everywhere. Earlier IT is a separate sector. Now IT is everywhere, right? Because of the artificial intelligence, right? You get all the information and press of the button, right? Take it up legal. Now today's contest, the doctor prescribes the medicine, right? What will happen? The people go and Google it out and find out whether the medicine is for the right disease or not, right? Every information is available, right? If we are still stick to that, the old way of thinking, old way of doing businesses, the business will not survive, right? What you need to really look at is, when somebody comes and give the business proposal to you, first question you ask, are you tech savvy? How your business has grown, right? Last week I went to one restaurant, my son has took me there, right? I asked the menu card. He says one card he has given me with the barcode. You scan the barcode, I will get the menu. Simple as it is. And press the button, the order goes, right? The technology is everywhere. Technology is everywhere, right? In the banking industry, the technology plays a vital role today, right? Number of walk-in is coming down in every branches, right? I don't know, I have not seen DD for last 2 years. Even a single DD I have not seen. Probably you all issued a DD for any government tender or order. No one has taken a DD for, for application form applying to a BCom, BSc, RBE, MBBS, right? No one has taken a DD for sending to their father. No one has taken a DD to send it to their mother, right? DD, I don't know. I have account with one of the leading private bank for last 10 years. I don't have a checkbook. Even from the first day I have not taken a checkbook. I am managing without checkbook. Where is the checkbook? Where is the DD? Number of ATMs are coming down, right? So the technology is growing. You don't know, every minute technology is reviewing on its own. Find out your customer, your borrower, tech savvy or not. If he is not tech savvy, even if financials are good on last year and year before, there is a good possibility you will not able to sustain his business for next 2 years. We all think the past financials will make lot of differences. We are looking at how he is going to perform for next 2 years, next 3 years, right? That is why the technology obsolescence are coming into that. So the important point in the weakness, we need to see technology, we need to see what is the competitive pressure, all these things are important. Competitive management, right? Good brand image, strong growing customer base. These are all the 2 important points for us, right? When somebody gives a proposal, find out what is his brand on the particular locality. How many customer respect his brand, right? That is critical for us to sustain his businesses, right? Today contest, the people go by the brand. The people not go by the quality. People not go by the quality. If I want to buy a shirt, I will go and buy it from Raymond's. I don't know whether it's a good quality or bad quality. People go by the brand, right? And whether he is getting a growing customer base. In a banking also we will see how many CASA accounts are coming, how many term deposits accounts are coming. It is not the quality, it is on the quantity, right? So that matters to us. And whether the business has got R&D skills, product differentiation, whether he is able to bring new product to his businesses, right? Earlier days, the hotel fellow do only hotel. The South Indian hotels, South Indian restaurant who serve dosa, idli, continue to serve dosa idli for years together. Today, serving only dosa idli will not make, your business to grow. Today, North Indian dishes, Chinese, Italian, the people start eating everything today, So the growing need of the new product is also important. So please look at all these angles for that when you are analyzing the credit proposal, right? This is a very critical key, right? There are three major risks. One is at business risk, mainly talking about market positions and operating efficiency, right? Second one is competence and integrity. That talks about management risk, risk appetite. Third one is accounting quality and financial positions and structure. I will take more than 1 minute of time to understand and explain you these three risks. Right, this three risk is a critical for you to evaluate the proposal. If these three risks increasing it, gone. You can expect the account become a NPA in 6 months time or 12 months time. One is business risk. What is its market position and operating efficiency? Any business can collapse. It not necessarily the business is there for 10 years or 20 years. Not necessarily. Even 20 years business can collapse in overnight. Right? I have seen businesses which is age-old businesses collapse in overnight. Please look at what is its market position and operating efficiency. Second one is management risk, competence, whether they have a good people able to manage, integrity. Third and fourth one is accounting quality. Are they accounting it properly? The finally financial positions, existing and future. Not only existing, also future. Look at these three risks. These three risks is a basis for a credit risk. Right? I am not talking about how much loan you can sanction. I am talking about how to evaluate good proposal. Right? You can give 10 loans, 20 loans, 30 loans, 20 crore, 40 crore. That is not a matter to us. Out of 20 crore, are we able to have a zero NPA? Are we able to have a minimum of 3 to 5% NII net interest income? Are we able to get a sustained interest income for the bank for next to 20 years? That is very important for us. Please look at these three risks. These three risks leads to standalone credit risk. What is credit risk? Risk of default. What is credit risk? Risk of default. Why the proposal is become a default? Because of these three risks. Right? You take any book, bank financial management or financial management, they will not talk about the first two risks. They will talk more about financial risk. Financial risk is a third positions. Please understand that. If you give a weightage, business and management risk which constitute around 60%, financial risk constitute only 30 to 40%. The good financials not alone sufficient. Good financial alone not sufficient to make a repayment. You also have a good management, you also have a good businesses. Right? Then you can lead to overall credit rating. Right? The good credit rating based on all the three elements leads to credit risk as well as overall credit rating. Right? This all additional parent group, government support, right? All these things we can see. And project risk. Right? Let me take you through some of the key basic financial statements, how to understand on this. Right? What is financial statement? This all you know. Balance sheet, income statement. Income statement is nothing but P&L, cash flow. Right? Financial statement. Again, balance sheet, statement of financial position on a particular day. Income statement, statement of operation. People talk about P&L. I am talking about, I am redefining it. Income statement, we don't say as a P&L. Please remember, it is called statement of operation. Statement of operation. Please make a note of it. Right? And statement of cash flow. Right? Statement of cash flow is important. Right? Balance sheet. Basically, what is it? It shows the position of liabilities and asset. Right? That is what it is all about it. But please make a note of it. In the bottom of the line, I also given, please remember, please look at the list of liquidity. The list of liquidity. How liquid the company has got a liquid cash to make a repayment. That is what you need to look at. Please don't look at net worth alone. Please don't look at net worth alone. Most of the time, the balance sheet, the people look at net worth. Please look at liquidity. The list of liquidity which is available, right? That is more important for us, right? Right. How the balance sheet look at? Asset, liability and equity, right? Most of the time, the people talk about balance sheet, will talk about liabilities and asset. I am also talking about equity. That is very important. Why equity is important? Equity denotes how much money the promoter brings in. How much money the promoter brings in into the businesses. That matters. If the promoter brings good amount of money, he will stay in the businesses. If the promoter gives very less amount of money, that is called other person. Why he has to bother? You don't have to bother, right? Then you will also look at others. Please look at shareholders' equity. That is critical for us, right? The income statement covers a period of time such as quarter or year, right? Anybody who look at income statement, they will talk about profitability. P&L denotes profitability. But what I am just trying to convey you is, please don't look at only on the bottom line. The people can bring good quality profit after tax without even increase in sales. Sales is a top line, revenue. If without increase in top line, if there is an increase in bottom line, there is a concerns on the operations. What I am talking about top line, it is on the sales. The sales has to increase. If the sales increase, if the profit is low, no problem, you can pick it up. If the profit alone increases, sales is decreasing, that means he is making profit on account of other income, or he is making profit by way of reducing cost. Cost reduction is possible only to certain extent, not beyond certain point. Please remember, cost reduction is possible only certain extent, not beyond certain point. Please look at top line, whether he is able to grow. When you recall on the first 3 slides, when I talk about the customer growth, customer base growth, new product launch, the market, all these things which influences the top line, the sales, revenue, right? Right. Income statement has got a 3 component: revenue, expenses, profit and loss, right? The first one is revenue, critical, right? Expenses you can see, right, how it has been looked at, right? Next one is cash flow, very important. Even if you are not looking at in a deep way on an income and balance sheet, income statement and balance sheet, please evaluate cash flow critically, because cash is a king. Please remember, at any point of time, even the business made losses but has got a good reserves, he can be able to repay the loan, right? What is our objective when you are evaluating the credit proposal? You are evaluating the credit proposal and see he will do good. Yes, he will do good. You give the funds for him to grow. Yes, you will give the fund for him to grow. What is our objective? Whether he will be able to repay, right? My NII can grow. That is what you need to look at. For that, you need to have a cash flow. How the cash is coming? Operating, investing and financials. These are all the 3 important elements of cash flow, right? What is operating? Day-to-day business operation. Sometimes the business have a cash, not from the operation. He borrow or he redeem the investment. Both are bad. He has to have a good amount of cash from operating. He has to do business and generate cash, right? Look at that, whether he is able to generate cash from the operations, right? How the closing balances, all cash transactions, the opening cash balances. These are all the 3 critical points which you need to look at. what is his opening cash, how much cash he has generated, surplus, and then what is his closing cash. These are all the three critical points which you need to look at. Success means next stop.